All right, welcome back, everyone, to another Profit Strategies podcast. I'm Tom Gentile. With me, as always, is Chris Johnson. Chris, happy Friday again.
Yes, happy Friday, Tom. Happy Friday.
You know, I feel like as I get older and older, my body feels like an option. I'm going to end up expiring worthless.
And that time decay, it accelerates, right?
It's kicking in. It's totally kicking in. Anyway, glad to have you on the program again. You take a look at what happened last week to this week. There's a lot of churning going on in the market. I mean, it's struggling to make highs. It pops. And a lot of what I see happening is, I would say a good 3 days this week at least, the market was up in the pre-markets and then just kind of fell off.
Right. There's a lot of stuff going on, and churning is a great word to use, I think, when I look at it. Intraday, you see everybody buying in the morning. There's a lot of excitement overnight, people talking about earnings. If you look at what happened this week, we had like Sonos come in after hours and just knock the cover off the ball. iRobot do the same thing. Stocks went through the roof. Everybody wanted to own them the next morning, and then selling into that strength. I think that's the churn that we're seeing right now that's controlling this market, at least in the second half of trading every day.
Yeah, I look at my own account, and my own account, it's making higher highs too, but it's also getting some of the pullback as well because the stocks that I own and the options that I am part of a lot of them are moving around a lot with the stock market. So, for instance, like Amazon, is one of the options I have in my portfolio, and Amazon is it's not been one of those stocks that's been moving a lot with the market. If you look at AMZN, it's part of the FANG group, and the FANG group as a whole has not really performed that well. Amazon's had lower lows all week long. It's not participating with the overall market, and maybe that's because it was so in favor coming into the end of January and moving into the beginning of February. And maybe they're just taking a breather right now.
I think it was a classic overcrowded trade when you look at it. You just nailed it. I mean, this is one of the stocks that pulled us through one of the hardest years we've seen since 2008, 2009. With the pandemic hitting, people put the market on the shoulders of Google, Amazon, the FANG stocks. They were that pillar of strength for the market. Everybody's in them now. They're just crowded. And I think I've got another theory, actually, as we go on this.
Sure.
Let me fly this by you. We're going to have working theory moment, Tom. So when you look at Amazon, when you look at Costco, when you look at Tesla, when you look at these stocks, they've got one thing in common. They've got more zeros after them, and they've got commas in the prices, right? They're high prices. And I thought about this morning when I was looking at Costco, which should be a leader in its group, and it's slipping. The 50 days rolled over on the stock, 20-day. I mean, it's definitely starting to get into a little bit of a downtrend. But when you look at American Eagle Outfitters, much more specific, it's still in the retail sector, but the stock is $25 and it's on a tear higher. Are people getting out of the high price stock business right now because everybody likes the idea of small prices?
I sure hope so. I mean, it's funny. Before you and I came on the podcast, I was at the kitchen with my wife and with my son, and we were talking about the same thing. What's out there to buy of value? And she's floating stocks by to me like COTY, Rolls-Royce, United Airlines was one that came up. And I kept saying, I'm looking and I'm like, yeah, they're cheap for a reason. They're cheap for a reason. But, ultimately she's looking to put her money into out of favor stocks. And I don't disagree with her because, when you look at like the Wayfairs of the world and Chewy's of the world, they've just been on fire. And these stocks, when you look at the risks on them, their debt and their cash flow, you wonder if their cash flow is going to cover their debt.
Right.
In some cases, some of these stocks have more leverage than others. I mean, Carnival Cruise Lines was another one that came up. We were talking about, and we were just wondering: is this company even going to be around, or is it going to get gobbled up like Royal Caribbean for a cash offer? Because it's not. When you look at that industry, and a lot of that industry is coming back on hope. It's just not. It's just not coming back with the hope crowd.
No, and you just when you talk about debt, oh my gosh, look at the debt that Carnival Cruise Lines has, and you have to build those ships. The thing that I also think of is you also nailed it once again by saying they're cheap for a reason. When I look at Carnival trading at $20 and it was up at 24 a month ago, there's a hope trade that's going on there. I don't think people are getting past that next level where they say, okay, once Carnival Cruise Line really starts booking cruises again, they're going to have to go out and get these ships certified. They're going to have to clean them. These things have been sitting dormant for a year in some cases now. So it's going to be expensive. It's one thing to take a plane off the tarmac or out of the desert that's been sitting there for a while and get it back into service. But these floating cities, my gosh, how much debt are they going to have, or how much expense is going to be incurred bringing those back in? And those companies haven't had a kitchen sink quarter yet. Carnival hasn't. They haven't thrown it
No,
all in and said, we really stink. Don't buy us.
no, they haven't.
No.
But you know what? This I think we can save for another time. I mean,
Yes.
if we were to just kind of summarize, I mean, my summary of the market this week is it just looks like a rollover week, and I think even next week might be a rollover week too, since we have a shortened week coming up. But
Well, and we're on the other side of earnings too. Earnings are starting to roll
exactly,
down now. Yeah,
we're kind
so
of
a
in
little
no
less
man's
catalyst.
land.
Yep.
Yeah, we got no man's land. We have, I mean, President's Day is a U.S. holiday, and that typically has some bullishness in it before and after the holiday. But what else are we looking forward to? I mean, most of us are looking forward to Valentine's Day weekends coming up, and
Uh,
if you're in my camp, yeah, you haven't, it's too late to order flowers. Got to go out and get them yourself. And I've got to come. I'm always I try to outdo myself
you
every
playing a
year.
heavy game
But
on
running
this,
out of
right?
things to do,
Yeah.
you know.
Uh,
But anyway, that's a story that that we could end right there. But I mean, you take a
I'm
look at the
trying to
overall
look up
market.
how much flowers.com is trading for right now, just so I can get it before the
You know
Tom
what? There
Gentile
you
order
go.
gets in. Yeah.
You better hurry. You only got another day, day or so. But I mean, the bond market's kind of firmed up. Cash is trying to firm up. The oil market, and that's where I want to segue into what we are going to cover today. The oil market, Earl market, depending on what part of the country you're from, is at highs that we just haven't seen in quite some time. I mean, Brent crude's trading above 60 now. Once that thing hits 65, the cruise lines are excited because they get to charge you that surcharge. Problem
Exactly. Yeah.
is they're not. You can't charge surcharges when you're not floating.
Nope.
When
You
you're
got to
not
ship.
running your business. But that'll come back in play real soon. But I mean, USO is trading at levels that I didn't even think they were going to be at until later this summer, and yet we're kicking in to an area where I just see a lot of seasonal opportunity that happens this time of the year and rolls into February. There's fundamental opportunity. I mean, I saw, now, Chris, you
Hmm.
know me.
Yep.
The New York Times is my Bible. Whatever they say, it's like from God's lips to my ears. And for those of you that don't know, that's called sarcasm. But
Yes.
they did have an article that came out recently that now they're saying that the COVID rates, number of people getting infected, and now even deaths, that the drop is for real, is what
Right.
the New York Times is saying. Drop is for real. Now you know what. I mean, I get the laugh. I have a good laugh at all of these newscasters out there, and really more mainstream media. But numbers really do not lie. And if you go and look at Johns Hopkins numbers, and you look at Worldometer, which is what we look at too, I
Hmm.
mean, those numbers are truly in a downtrend. This is going to continue to fuel demand for oil
Yep.
and for travel. And so, this could be even spread out with airlines, it could be automobiles. But if we just look at the main benefactor, the stuff that comes out of the ground, and he who pumps the stuff that comes out of the ground, and he who then distillates it and refines it and distributes it, we've got a lot of opportunity perhaps coming up in the
Yep.
next couple months.
Yep.
So I yield
Absolutely.
to you, Chris, to start the ideas of opportunity.
Oh boy. All right. Well, first of all, you know what? I always like to play if I'm looking at something that's in the beginning of the trend. I always love those ETFs, Tom. And if you look at like the XES or the XOP, and the XOP is getting to the heart of what you're talking about, the exploration and production guys. These are starting into long-term trend bull market trends, breaking above their 20-month moving average. Love adding those as like that foundation to the portfolio because I think you're right. 2021 is going to yield prices in oil that are going to be much higher. And these guys are getting paid to pull it out of the ground. When I look at the stock level, I look at Marathon, MRO. I love this stock breaking into a nice long-term bullish trend, breaking above its 50-day moving average. All of the things are lining up, and it's an $8.73 stock as we sit here and talk right now. You can get into it cheap, which is most of the case with ExxonMobil and Chevron and all these. They are cheap. This is like, it feels like GE. You almost feel bad buying them at this level when GE was down as
Well,
low
you
as
know
it
what?
was.
I'm with you. I mean, if you take a look at USO, for instance, and I'm
Mm-hmm.
not a big fan of commodity based ETFs because of the drain. It's like
Right.
you turn the faucet off and it's still dripping and you're losing water. And in this case, you're not losing water. You're losing the fact that the manager, first of all, takes a fee every month
Yep.
off the top of USO and puts it in his pocket. And then the other area that's wasted, wasted water or wasted oil or wasted share price in this ETF comes from the fact that every month these managers have to continually buy oil futures contracts,
Right.
which in themselves are a decaying asset. Because if anyone on that's listening to the program knows anything about commodities or futures contracts, there is a guarantee that futures. You'll hear almost very few guarantees out of my mouth, but the one guarantee I will tell you is that the futures market eventually becomes the cash market. And
Yep.
that means if you're buying something at future delivery, you're paying a premium for it. Cash is in commodities is typically going to be lower than the future contract. And that futures contract and cash, that spread narrows down to where futures becomes cash. And that's what puts the drain on an ETF like USO. That being said, USO does have some interesting spots. And you got to remember the reverse split from last year,
Yep.
where they did that 1 to 20 reverse split. So the chart's going to look a little weird. And some of you that, if you bring up a long term chart on USO, no, USO did not trade at over $100 per share last year.
Mm-hmm.
All right. At the beginning of 2020, it did not trade there. Remember, take that number and you got to extrapolate it down to where it was before the 1 for 20 reverse split. But let's take the numbers as they are because there are some support lines. And the support that I see is the resistance from last year at 48 and at 58. Back in the March and April areas as the pandemic was all of a sudden becoming worldwide and world known.
Yep.
So I think 48 and 58 are actually potentially great places. 48 is a great place on USO. The other thing too, Chris, and you mentioned stocks. So, Chevron, right?
Mm-hmm.
Symbol CVX. I was trying to tell my wife about this today because she's saying, "Well, I like Occidental Petroleum." This is the conversation we were having this morning. I
Oh,
couldn't believe it.
I love it.
She says, "I like Oxy." And I said, "Why?" She goes, "It's cheap." I said, "Well, it's
Ugh.
cheap for a reason." So, but I said, look at Oxy. One of Oxy's main competitors is Chevron. And I said, and Chevron is, Chevron last year was $120 a share. She says, too expensive for me. She goes, and by the way, it was down to below 55 before it came back and is trading at 90. So I'm not looking for $90 stocks. And I said, well,
Mm.
okay, you know what? If it's a play on oil and it's a play on the US dollar, then I think Oxy makes sense as a cheap stock. But if you're looking for quality, I said Chevron's a quality. Chevron's a well-known name. They just have they're healthier, and more importantly, they pay a 5.5% dividend
I was about to point that out. A lot of
at these
people with,
prices.
yeah, Chevron's below 20 basis points on the dividend, or I'm sorry, Occidental's below 20 basis points. Chevron's at 5.5%.
Yeah. And now
You know,
there's no guarantee that they'll continue to pay that dividend. But if oil prices continue to firm up like they are right now, I don't see any reason why that dividend may not stick.
No, I'm with you. I'm right there with you. And the other point, if you look at Occidental, they were down. They're still down 34% year over year right now, versus a 17% on Exxon and on Chevron. So
And
you've
that's why she likes it.
yeah,
She says it's like going to the dollar store for energy stuff.
you know what?
And then I say, I've been to the dollar store, and the stuff there, a lot of the stuff there just isn't the same. If you're
Kind of
getting
breaks.
toilet paper for $1 is not going to feel the same as toilet paper. It's a little more expensive.
Mm-mm. Nope.
Razor. I mean, razors. You name it. The stuff that you get at the dollar store just really pales in comparison quality to the same thing you might get somewhere else, which is a better known brand that's going to cost you more, but it's going to it's going to feel better.
Right.
And so I liken that to Chevron, from Oxy to Chevron.
Well,
So,
you're describing the difference between cheap and inexpensive, and I think Chevron is inexpensive, whereas Oxy may be a little cheap.
right.
Yeah. So
What do you think
again,
about before? I'm sure you have a couple of other ones that you might want to throw out there. But what do you think about a producer like Valero?
you know what? I like Valero. When you start to talk, and you talked about the difference in when you start to talk about domestic production. Now, obviously, you're getting away from domestic production. You get the dollar involved, so it becomes more of a play on the currencies. I like Valero though, just because of its size, its reach. It's there. Valero. A lot of people don't realize Valero is everywhere. They are
It
long
is.
and deep with their game, and so for that reason, if you're expecting this global, and I don't want to use the word boom, but if you're expecting this global expansion right now, and certainly inflation is kicking in everywhere, Valera's right up at the top of the list, I think. I think you
Yeah,
have to
I
keep it
mean,
up there. Yeah.
a fundamentalist would like it because it's a healthy company.
Yep.
Um, a and it's global, so it has global risk. It has kind of global diversification. It's a play on the U.S. dollar. If you're a technical chartist, take a look go all the way back to the beginning of 2020.
Yep.
Take a look at the highs that were up in the high 90s, and draw a line from the high in the beginning of last year to the high that occurred somewhere in June, and then draw that down, and you can see that late last year we broke through that lower high channel, that lower high trend line,
Yep.
and we kind of moved sideways. But in the last couple of weeks, we've broken above. They had a good earnings report that came out recently, and we broke above that kind of 60 resistance. Now we're sitting in the low 60s. Next area that I see for resistance on this one is 75. And of course, there's those highs at 95. I think it might take some time to get there. But I mean, it looks good to me.
It looks great. You know what? If you go back, and I'm looking at the same chart you are with the monthlies right now, and you draw that same channel, just expand it back to 2018, June, the highs in June 2018, and you still get that same exact channel you're describing, which makes the breakout, I believe, even stronger. You're taking out this trend of lower lows, lower highs, and that is a powerful thing. And again, holy cow, throw in the inflation dollar play on this, and I think Valera's, like I said, right up there at the top. Good call, Tom.
Yeah, well, thank you. Thank you. Okay. What else you got?
Well, you know what? This is one of those, you're seeing it across the board now, not only with the oil plays, but natural gas as well. And when you start talking natural gas, you and I've talked a lot about clean energy, the clean energy play. And I actually had somebody call me out recently and say, well, natural gas is the first clean energy. And I went, yeah, you know what? You kind of are correct.
It is.
You're right.
Whoever said that to you, I wholeheartedly agree. And
Mm-hmm.
where in the world did natural gas go from clean to dirty energy? I think that might be more of a political stand,
You are
because
correct.
for the longest time, nuclear was clean energy,
It
and then it
certainly
became a
was.
political stand after we had a little leak in Pennsylvania.
Yeah, exactly. But along the lines of the trade on USO, or looking attractive on the USO, the UNG is starting, and it's a more volatile trade than the oil trade. But for the traders out there that are looking for a little more volatility and maybe a little more of a spring in the step, I think that you've got natural gas that is going to follow along the same trend as oil and maybe get a little bit faster. I look at UNG at 10.50 right now, and I see a $14 to $15 target on that in the next 3 to 6 months, and I think that is obviously a powerful move.
Well, 14, 15 are the areas of resistance on UNG. But,
Yep.
I mean, Chris, I'm a pattern trader. And one of my patterns in UNG is that as oil goes up during the spring months, UNG tends to go a little flat. And so, this is just a pattern that I've seen happen more often than not when you look at decades of research. But I will tell you this. I mean, it's as cheap as that I've seen it in the last year for sure. I mean,
Mm-hmm.
this was, and again, UNG is another one of those. This is another one of those commodity ETFs, the thing I
Yeah.
don't like about them is you got to sit and you got to, it's like trying to catch water out of a dripping faucet with your hands and try to catch it
Right.
all. It's going to happen.
Right.
There's going to be days when natural gas is sideways and UNG is going to be down a little because again of the fees, the management fees, and because what's called contango from all that purchasing of futures contracts. But it
Yep.
is cheap. I mean, when I look at like even a 300-day chart, 19 was in the far left hand corner. And,
Mm-hmm.
9 wasn't just too far ago.
No.
So the potential definitely is there. The last time I had a big move was back in late July of last year when it went from 9.5 to around 14.5. That was the biggest sustained move I see on the chart.
Yep. Yep. That was. You know what? There's an interesting trade off a trade on this, and we can bring it back to Amazon, which you were talking about earlier. Did you see the jump in Westport fuel earlier this week?
No, I did not. Please,
Dub,
please tell me.
So WPRT, for those that want to check out the chart, Westport Fuel has been around for a while. And I can remember Phil LeBeau on CNBC years ago being in their plant. This is a subsidiary. They work with Cummins
Oh yeah.
out of Indiana, right? So Amazon has ordered 1,000 natural gas engines that are being given to Westport Fuel so they can switch them over to natural gas. So they're
Oh wow.
using these.
Okay. So
Amazon
fundamental
is
play.
it's a fundamental play. The stock went from 865 up to $13. We had what I call crescendo volume as the stock was overbought as it was at that $13 level. It's kind of filling the gap a little bit right now, but an announcement like that, you don't dip much more than 11 to maybe even 1080 on this stock. And then it fills back up and goes to $15. I think everybody's so amped up, pun intended, on electric vehicles right now. This is the original clean energy vehicle. And I think it's awesome that it got some great publicity. And Westport was trading at $2 in November. It's at
And
$13.
let me sidestep as we finish up our podcast
Uh-huh.
here for a week. Um, Storm systems. So you sent me a picture of quite a bit of snow in Cincinnati. I've got a house in New York that's got snow all over it. In fact, I think we had 30 inches of snow. I
Oh.
had the guy go plow it, and I said, "Hey, can you plow the driveway real quick?" And he said, "There's no such thing as real quick. There's 30 inches of snow. We had 2 feet, and then we had another 5 inches that fell after that." And I'm watching the Weather Channel / Weather Underground yesterday.
Uh-huh.
There are 4 storms coming in the next what week, 2 weeks,
Yep.
4, and they're all taking the same path. They're
They are
going
lining up.
west. They're going to hit you, and they're going to hit. Then they're going to hit New York a day or two afterwards. And the reason I bring this up is because I'm going to sidestep here for a second, Chris. Natural gas and heating oil tend to move up when you have these type of situations lining up. And so, at least for the short term, this could be a good short term play. Now, the other thing that I know is it's always buy the rumor and sell the news. And in the case of if you're a pattern trader and a short term pattern trader on energy and weather related energy, then you're always looking to buy the storm coming and sell the storm when it gets there. When
Yep.
snow's falling on the ground, that's the time to get out of a trade that is weather related because it's always about the unknown. Once the unknown is known, once we know how many inches, once we know how much ice, once we know how much power is lost, that's when the unknown becomes known, and then things tend to balance themselves out.
So that could be why you see an 11% swing in UNG over the last week here. on almost a daily basis, it looks like.
and why we could continue to see it at least for the
Yes, I
coming
love it.
week.
I love it.
So
So I love that. That's a nice little, quick trade idea out there that, and certainly we're not giving that as a recommendation, but man, the volatility, traders love volatility, don't they, Tom?
they do, and
Volatility
it's
creates
definitely something to
opportunities.
watch.
Yep.
Definitely
Good
something to
call.
watch. But,
Great
hey,
call.
Chris, you got any plans for the 3-day weekend?
Um, you know what? No, I'm going to relax and I'm going to shovel my sidewalk and my driveways and all that stuff, Tom.
Well, here in Florida, we don't have snow. We actually have really good weather. And there's nothing like a President's Day weekend that makes me want to go out and buy a new mattress.
Oh my
Because,
god. How did that ever come to
maybe,
play?
hey, you know what? Maybe what I can do is I can roll that into to a Valentine's Day gift, too. What do you think?
I think it'd be easy. You know what? While you're at it, buy another really nice one for that mobile trading vehicle that you're putting together. Get a really
Yeah.
comfy mattress there.
Listen,
Yeah.
if I ended up buying a mattress as a Valentine's Day gift, I might be the keys on the door might not
Yeah.
fit like the way they did.
Yeah, you definitely choose your gifts wisely.
Choose
1-800 flowers.
just like your trades. Choose your gifts
Exactly.
wisely. All right. Well, hey, Chris, great. Clocking in with you again here for another podcast.
Looking forward to it again next week.
Yeah, and guys, this is Tom Gentile with Chris Johnson. You enjoy your long holiday weekend, and we'll see you again next week. Till then, bye now.